Good afternoon, everyone. My name is Dan Allen. It is 11 a.m. Saturday, April 24th, 2021. This is our Saturday Q&A. I am one of your hosts, and what we do here every Saturday morning is talk about trading. We have two sides of our business project. One side is trading, one side is helping another person, pulling them up from where you were just at. Loving on each other, if you will. I guess that could be weird sounding. So just each one offering the other person something that's good for you. But this side right here is just about getting from 1 week of trading and information, getting any questions you have answered, or just celebrating with each other our wins, and going to the next week. So this is that. So first, I'm Dan, and what I'm going to do starting off is I have a trade I want to evaluate, right? It's actually called back testing. In our world is when you actually make a trade first, get a result, then go back and look at the trade with the benefit of hindsight, and then see what you see. Okay, so the chart you're looking at now, and then so this is a question for me, which is what happened with the trade. Okay, and so we're going to start off with this is a BTC USD. So let me show you that. This is called a watermark, which just lets us know which chart we're looking at because they all look the same without this. So this is the Bitcoin versus the US dollar on a 1 minute chart. That's exactly what this means, right? But this is not the chart where our issue is or our back testing is going to be. We're actually going to go to, so these are, okay, let's do this. So this is the US dollar versus the Japanese yen on the hour chart, the Australian dollar versus the Japanese yen on the 5 minute chart, the US dollar versus the Japanese yen on the 5 minute chart, the euro versus the US dollar on a 5 minute chart, the US dollar versus the Japanese yen on a 30 minute chart. As you can tell, we do a lot of stuff with the US dollar versus the Japanese yen. This is another US dollar, Japanese yen on a 5 minute chart. So these are the exact same. This is a euro versus Canadian dollar on a 5 minute chart. And then this was the one we were looking at, which was the Bitcoin versus US dollar on the 1 minute chart. So if that doesn't make sense to you yet, that means you're newer in our communities. That's why I wanted to give you that, I guess, introduction, that there are different currencies that fight each other. That's the way I look at it. And then time frames of how we're reading information. So right now, the back test we're going to be starting off with is the US dollar Japanese yen on the 1 hour chart. So let's open it up. Okay, and let's make it look a little bit clearer for us. Okay, so I'll put some beginner data for the trade, and then we'll build it out together. So it's not actually accurate yet. I went and put a moment in time I wanted to be stationary, and that is the 20th, April 20th, 2021 at 5 p.m. Eastern Standard Time. Okay, the trade I'm looking for happened sometime on the 21st that morning, and it was a sell trade. So now we're going to build this out to help us see what's going on, okay? This is one of the ways I back test because I can't draw a straight line. I have very bad graphical education, or my brain doesn't work that way. So I have to actually see it, and we're going to do that together. So this right here was the entry. So I'm going to actually go to entry. I'm going to go to the coordinate, and I should be at 107.952. Okay. Oh, wow, that was good. I was right at the right spot. Okay. So then we lost on that trade. So I need to go to this one. And now my coordinate should be, hold up, 108.113. Okay. There you go. And there was no automatic take profit. But what I will do is our template as trading together, learning from Coach Max. If you don't know who Coach Max is, you're also new to the environment. So just take that name down. Is 20 pips, okay? So that 20 pips would be 107, and I'm going off of the 107.952. It'd be 107.752. So that's that. So that would be 20 pips away from where we started. So if you kind of look here at this spot where we at, take the measuring tool. Oh, I might not be who I, there we go. So if you look here, right at 19.7 pips, so right at the 20, I probably got to go a little bit lower on my, how I started it. So that would be 20 pips of distance. And what a pip means, right? As a trader, we use two variables to determine how much we won or lost. How far the trade moved from the entry spot, which is this 107.952, and then how much we wagered, right? So let's say right now for this conversation, we wagered $1 per pip. If it would have went down to here, which at some point it did do, but just we wasn't in the trade at that time, that would have made $20. And so to know how much we lost, we still gonna use $1 as the reference point. Let me bring a calculator over. Okay, hold on one second, and then we're gonna get to our stuff. But so what I would do is I would take 108.113, and I will subtract it. Let me hit the subtract button from 107.952. And so this is the 6 is actually the pip, the single digits, and this is the tens place, if you will, for pips, if you know school. So we lost $16 if it was $1 per pip. So now let's find out what happened with the trade. Okay, so I need to escape. And then I need to go to the 5-minute chart, which is where I would enter that. I want to add the 20 pip and dip indicator because I would have used it. And then let's go with, let's make it bigger. And I know it was sometime during the 21st, early, because we got out of the trade at 8 a.m. Sorry, whoever that was that left. So let's go back. Now, one of the things about TradingView, so first, Alexis and Jess, can y'all both hear me?
Yes.
Okay, so one of the things about TradingView that is beautiful for me, and if y'all look back here, where once I lift the thing up, I'll measure moments of time. I'll make this a little bit bigger for me. Okay. So the 22nd, the 22nd, the 22nd. Now we're at the 21st, but that's at 7:50 p.m. military time. This is 7 a.m. Let's go back to about 2 a.m. Okay, so right about, okay, I'm gonna put another thing here. This is right about 1 o'clock in the morning. So right here, so watch this, Alexis. This replay button, this bar replay, I'm gonna click it here. And what it's gonna do is erase everything to the right. And it's gonna treat the chart as if it's that moment in time. Now that I've done that, I'm going to make my screen big again because I like full screen. It just makes me feel important. Okay, we're going to move this out the way, make this make a little bit more sense. So the trade that I'm looking at, I entered here, okay? Or it wasn't me. It got entered here, okay? So we don't know when, but we know it happened here. And we know it happened on the 21st. So right now at 1 a.m., price is here. So we're going to do each one of these candles that's going to show up is 5 minutes in time. We're going to walk through this trade. So Jess or Alexis, if y'all want to jump into either spot, let's look at it. So the 20 pip and dip indicator, which is exclusive for the Epic community, but part of your subscription, is these dots, these funny thingies, and then this line. The line is the 50, so you can get it without it, but how it all works together. And then after we watch the trade, you can ask questions about this trade or anything else. I just wanted to see it, and I wanted to show it with the community. So now with the replay bar, you press play, and it actually starts to show the actual real candles as they developed. Okay, it wouldn't have entered yet. Not yet. Could have maybe. Sometimes this type of stuff is wacky. It could have got in here. Let's see what happened. Right now we're at 3 a.m. This is when London would have came online. And if that doesn't make sense to you, you can write that down and I'll explain what London coming online means. So when London came online, price actually went up, which is bullish. Bull for trading means up, bear means down. So bullish means upward, bearish means down. And let's see when this trade triggered in. Interesting that we entered right about at the daily open, which is what these pluses mean. Okay. Very interesting. What time is it? 7 a.m. I know the trade was closed by 8 something. So, okay. So I'm gonna pause. And as we go back, it looked like the entry, which almost is right at the start, it probably wicked in, which is here, which means that only the wick or shadow got to that spot. So potentially the trader saw the price running down and they jumped in. I don't really see a good entry, but this is how you back test and then start to figure out the thinking that led to the trade. But for this particular trade, it looked like as soon as, because it only got down this much right here, which is at 150 or Eastern Standard Time or 210. So that says something to me. And then the trade kind of went north, bullish, and the trader smartly got out when it broke their high. It broke their resistance. Okay, I understand the trade now. So if you got questions about this, we can talk about it. We don't have to at all. If you got questions about anything else with your trading week, yeah, good stuff. So I got my thought out in front of the community. And so anybody got any question about anything first?
I have a question.
Sure.
What does it mean? You said London got online?
Okay. Okay, so we are what's called speculators, right? Which means that other things are happening and we're watching it, right? And then as we're watching it we're guessing what's going to happen in the future, right? That's why we're replacing trades. So what we're watching is the bank orders between global banks, okay? So if you take a 24-hour day, 1/3 of the day is the New York, which is where we live at, United States, banking day, which is 8 a.m. to 5 p.m., right? So that's New York online. New York's 8 a.m. to New York's 5 p.m. Well, because I live on the East Coast, at 3 a.m., my time happens to also be 8 a.m. London's time. So the London banks, they actually work from 8 a.m. to 5 p.m. their time. It's just different time frames, right? So London coming online means literally the bankers are starting their banking day and they're putting in trades based off what their bosses told them to. And we get a chance to speculate because we can't see what orders got placed. We can't hear what their bosses told them to do, but we can start watching what the chart is doing and then making hopefully intelligent speculations on whether the chart's going to go up or down. So right here, where this line is at that says entry, the person that was speculating said to the market that they thought that the chart was going to all these candles together is called price action. So all of them together turns into what we call price action. So this trader at this spot is either here or here, because when you click the button, it makes the line. And then so they speculated that price was going to keep going, price action was going to keep going down, and they would have made money as it went down. But when they got in, it looked like it was, they teased them, because as soon as they got in, price went the opposite direction. You can only trade one or two directions, down or up. You're either thinking the market is going to go bearish, which is down, or bullish, which is up. So this trader thought the price was going to continue going down, bearish. They clicked the button, and then the price went up. Now, what happens is, for your question specifically, is that at 3 a.m. my time, which is exactly where my dotted line is, let me make another line for you there. 3 a.m. 3 a.m. my time, I know that the London banks are going to start putting in their order for their workday. So more people are going to be affecting the market at 3 a.m. than that was at 2:50. So kind of watch right here, these couple candles right before London comes online, they get kind of small, thin. Then when London comes online, so these guys are starting their workday. So I'm actually making speculations or guess to what's going to happen on their workday. And if you can kind of see, the chart went kind of up fast when that happened. So this trader should have waited potentially till London came online to
So they could get accurate results.
There you go.
So
now,
they don't.
Now check this out, Jabir. And this is my son. So by the time London came online, these red dots had already been built, and this is a resistance. And then these dots have been built already. This is a support. So and then there's these dots. So you got a lower high, which is here. So price is kind of, this was a ceiling, then the ceiling got lower, right? Which helps to the thought of price is going to go down. But London hasn't come on yet. London hasn't started to say how they feel about the workday. So if you could think about your Nana going to work, right? She gets to work, and she said she worked with the old people, right? So when she gets to work, she might work on the 4th floor, she might work on the 3rd floor, she might work on the 8th floor. She don't know that she get there. So we need to watch and wait till she gets her orders from her boss, and then watch her get on the elevator, then watch her get off the elevator. Then we can start talking about what we think she's going to do. If I asked you what floor would your Nana work at before she got to work, you just wouldn't know. And that's what happened with trading. Part of it is knowing the time of day and which bankers are on their work day while you're trading. Does that make sense?
Yes.
Okay. Good question, though. Anybody?
Mr. Allen?
Yes, ma'am.
Good morning, everyone. This is Alexis.
Hey, partner.
So I want to talk about it. You guys, I don't mind if you know that this is my trade. I sent this to Mr. Allen to take a look at it for me. And what's been going on, this is the same kind of scenario that happened last week. And I tested, after this trade loss, I came out of the market. I watched the market for a while, for like the next 2 days. And didn't take any more trades, but kind of, I guess you call it paper trade, just did it in demo or wrote down what I would have done. And for some reason, I keep entering or wanting to enter down at support when I should be buying. This is exactly what happened. And other reasons, like going up on the higher time frames, I'm thinking that I should be selling. And instead, I'm hopping in for a sale, getting stopped out because it goes the opposite direction. I guess maybe I'm getting in too early.
Well, yeah,
Because eventually it did enter and hit the take profit.
right. So
But by me getting in so early and I'm in drawdown way up here, I get out.
now let me so we got a couple things right to talk about. First, I don't have a top-down analysis, which I'm about to make. I didn't make it on purpose. So I could put it for the call. I wasn't gonna bring up that this was your trade, but since we're talking, the first thing is this time of day, I wouldn't be trading this pair. Both, right? I would trade this during New York or Asia. You are coming into London when both banks are closed, so you got less actual movement because of the banks themselves. So for me and you, I wouldn't trade this during that time, right? And if you watch Coach Max stuff, she'll show you during Asian what it looks like, and she'll show you during New York what it looks like, and you look for your move there. That's the one. Two, you said
yes, that's one thing. But I wanna say this, Mr. Allen. One thing that made me hop in because I'm seeing a nice move, like around London. You know, when I'm not testing, but just like watching the charts. And I'm seeing that UJ gives a nice move like around London. So that's another reason why I'm thinking, or I thought, okay.
I'm trying to help. I'm trying to help, right? So all the charts are going to move during different times, right? But what makes the charts move? What makes the charts move directly are banks making orders, then indirectly by potential hedge funds or other bigger speculators making moves. It's going to be easier for you to see the banks moves. There's going to be less fake outs when the banks make the move, right? So the banks make the move because their boss told them you got to sell this much yen, you got to sell that much, whatever. They have it's called a utilitarian purpose for being in the market. So finding the utilitarian moves are going to help you find what's going to be consistent, things you can more trust. The bigger speculators, they only make money off of winning retail traders' money. So by trading something where neither bank is open, the bankers aren't the person making the move. So now you're now in competition with higher speculators that have more resources to data and can push the market a little bit to create fake outs, which is what you caught here. So just one of your confluences, right, which is a confirmation to take a trade, is the pair and the time of day. So if you go take a trade, this same pair during an Asian session, the dollar banks are closed, but the Japan banks are open. So then now you got a potential what those guys and girls are doing during their banking day. If it's during during New York session, the yen banks are closed, but the dollar banks are open. So you're going to get more influence with those guys and girls during their bank day. The way you traded this trade, whether won or lost, you are outside of using the time confluence to help you.
Gotcha.
Okay, so now let's look at your same trade with a top-down analysis, since it's with us. And if anybody got a question, jump in. But this is right now for my partner. So first, real quick, bada bing, I'm gonna look for. I gotta play the whole thing out. Let's cut this off. Well, no. Right here when you got in the trade. That's good. So you have most recent high. Let's go there. It's turning yellow, so I keep my eyes working properly. You got most recent low. That's going to be somewhere down here, which is a little wide, but cool. Okay, so that's our daily. On the weekly, now I'm looking for key levels. I'm only going to really make them between the daily, so that way we can not waste a bunch of time. Price hasn't been up this high in a while. So I'm gonna come back, hold on, turn that green. I'm actually, because I have all that stuff missing, I'm gonna actually come all the way over here to where when price was over there. And what do we have? So this is a key level. If you look right here, this is my resistance. And now I gotta find, does price also play the game of support somewhere else for it to be a key level, or I'm gonna move it? I thought I was gonna find it. Y'all see right here? You see right here, Alexis?
Yes.
So this is where price has acted as support. This is where price has acted as resistance. So this line now becomes a key level because it had the two jobs in different timelines, but at the same level, which is where the line actually is. So that's a key level. And so just to make this one even faster, we're gonna go down to the hour. So I only made one key level. I normally would make all of them before I got into a trade, but for your trade on the 5, let's go back this way. Well, that wasn't a good one because that's at the top. Okay. I need to see if the bottom is a key level as well. So even before we had the 20 pip dip indicator to show us the red dots here, which is where you got out to, that's a key level. And let's go back one time for the 4 with the line. Let's go over, see if we can find a key. See if I just have a little that this is a key level too. Okay. Make that a little bit better, which looks weird because we already got the first one. So for 16 pips is not a lot of space on a, let's see what this do. We definitely got resistance here, but we haven't proven it as support. So let's see, can we? Normally, y'all, you'll draw your key levels before you start trading. I just want to see where we at this trade at a key level. Look at that head and shoulders. Somebody would have been right in there running that up. So I don't see it, so I want to take it off. Okay, so all right, let's get back down to the 5. Let's get down to the line chart. So that's one thing, Alexa, I'll tell you is to have things going in your favor, and time frame is one of them. The other one is you enter the trade somewhere over here because London was coming on at 2 your time, 3 my time. So this is another terrible time to really start taking a trade. And from a 20 pip and dip indication perspective, Coach Max, one of the rules she kind of gives is enter your trade for sells at lower highs. So that way it's bouncing and going in your direction. You kind of took the trade, a sell trade at a higher low. So that was 180 degrees out of sequence. So this is when you kind of chasing a trade because it's running and you feel like you're about to catch it. Even if you wanted to sell trade, you would have wanted to waited for one of the times it was coming for a lower high and then get the trade there, which is the sitting on your hands part. So all of the pieces of what makes an entry good. Now you were under the 50, so that was decent, but you want to be under the 50 and have it turning your way. It was already, does that make sense?
Yeah.
She said take buys at higher lows, which is when it's coming down and bouncing. But as it's bouncing higher than the last place where it was. Then you want to take sells at lower highs. So you want to have it come in and bounce and turn, but as it's turning, it's lower than the last place it was. So just the pieces of what made you take this trade is missing some of the safety precautions that Coach Max puts in place So what I hear you saying is that you saw something on the higher time frame and you said, oh, that looks good. Then you came down to your lower time frame for the entry, or you took the entry at the higher time frame. I know you take stuff at the 30 and stuff, but this is one of the reasons why I've been saying to you, come down to the 5 and make price give you confluence to press the button, and then sitting on your hands until then, which will help you not get in early, which gets you in a drawdown and have the experience that you had.
Thank you so much.
Yep. So you got it. You just gotta. It's like, so I don't do this when I drive a car, but I was studying to get my trucking license when Javier was real young, and then I wanted to get my airplane license at one point. So I found out that your insurance goes out, your life insurance goes crazy. So they know something I didn't know. But for a truck and for a plane, you actually have to do a checklist before you get in the car. You have to go walk around the truck and see if the tires are the right levels. You got to go check your brake lines. And then when you get around and you get to the other side, now you can get in the car and go, or the truck and go. Plane was the same way when I looked at the process. So there's actually a check sheet, which is now your trading plan before you press the button. And I do that at the 5 minute level.
Okay.
So first, hope that helps. Javier, did I answer your question with the London starting?
Yes, I understand it now. Thank you.
Okay, all right. Anybody else? So with that trade,
Mr. Allen.
Yes, sir.
Hey, real quick, while I'm on my coffee break at this construction site. Yo, give me those 2 nuggets you just shared. You said Coach Max said you buy when
Okay.
it's at. I heard it so many times, and you sell when it's at.
She said it not from a to do. She said it from a not to do perspective. She said,
Okay.
never take a sell trade when price is above the 50. Never take a buy trade when price is below the 50. So it's more of a warning than a thing to look for. I mean, it does tell you what to look for, but it's one to keep you safe. So when I'm about to press the button and I'm on a 5 minute chart, that plays in my head.
Right. You said, but you had put it in a way that like rung a bell in my head. You said buy at the lowest high.
Okay. Yeah. I got you. So on this 20 pip and dip indicator, they have things called the lower highs, and then there's also something called higher highs, which is on this side. And then under the candle, there's things called higher lows and lower lows. So she says she enters her sell trades at lower highs. So which actually means price was going up and it's about to turn around, and then, but it's lower than the last time that it was at a high. So this is a higher high. Then compared to that high, this is a lower high. So this lower high is speaking strictly from the one to the left. It's telling that it's lower than the previous high. And this low is telling you that it's higher than the previous low. Right? It's called market structure.
So
she
sells the trade. So she sells the trade at the lowest high.
At lower highs, yes.
Yeah, okay.
Almost the way she says it is she waits for it to develop. So
right. I like how you said it though. And then you buy a trade at the higher low.
Yes, sir.
Okay. No, go ahead, continue. I appreciate it.
Right, and those are more like to the positive, to look for it, wait for it, and then go. So for this trade, right, for this sequence of the chart moving, where it's not, it's like running, you're sitting on your hands, and if you're even waiting for the buy, you're waiting for it to stop and start to turn and make a higher low. So let me get my full screen on first. So she does a lot of it on the hour too when she's teaching it, but the entry's on the 5. So what she's doing is she's watching these higher lows and lower highs make. And so she see this higher low, and she see this higher low. So she see that is in the upward trend because it's creating a higher low and a higher high. So although it's at an upward trend, she's then sitting on her hands and waiting for the next higher low in the training. So if I'm watching this one and it's up here, I'm not taking a trade now because I'm at a higher high. I'm actually sitting on my hands waiting for it to create a higher low. Then I'm pressing the button versus pressing the button up here. So when people are chasing the market, they see a move happening and they try to jump in while it's moving and they get caught. That's what happened to Alexis. She was watching it move and then it was running down and she came to get in with everybody. And so the same trade she took, if she would have took it at this lower high, it would have then been, so the same trade, same day, that's 17 pips winning versus the time when she did press the button and it turned into 16 pips losing. And that difference between the two was her coming in on a lower, well, she actually took the trade. Does that make sense to you, Shahid? He might be gone because he said coffee. He really mean he on a bathroom break or something. So either way, check the recording, Shahid.
No. That was super clear. Like it was super clear. I just wrote it down so I can, at some point I know it's all gonna come together for me. Although I'm learning stuff sporadically.
So for you, I would tell you, look at it like boxing, right? We both got our hands up, and you're waiting for me to drop my hand to throw the punch. That although we're both of us there the whole time, the punch isn't available all the time. So it's kind of waiting for when to throw the right hand or when to throw the hook. And those are the things.
Okay, good stuff. Appreciate it.
Absolutely. So Alexis, besides for this losing trade, how was your trading week altogether?
I took 4 trades. I had 2 wins. I had 1 loss, and the other one I had to close out at break even.
Okay.
My trading week altogether, you guys, oh my God, it's been a roller coaster. The entries are really getting to me. Like, I'm looking at my chart now, going back over the trade that you just went over for me. And so, Mr. Allen, this trade was taken at 8 o'clock on the 20th.
8 a.m.?
So I have my entry in 8 p.m.
8 p.m., okay.
My entry in
my time.
mark.
Okay, good.
Right, 9 p.m. your time. And I'm looking at what made me, if anyone else doesn't have any questions, can I share my chart?
Oh, yeah, absolutely. Go ahead.
All right, give me a second.
Well, that's pretty decent right there. That's good. No, you entered here though, but it couldn't have been at 8 even because your entry is this number. So you either enter here or you entered here. But if your chart's coming up, this is the point, Shai or anybody. This is the time frame. Oh, we're good. I'm ready. Okay.
Trying to find it.
Mm-hmm.
Here it is. Let's point to this one. Okay, so I guess it was 7:30.
Okay. Which is a good time into this trade now, because now we're into the Asian session. So I mean, that's one thing. But look at the candle, right? You got the one to the left is it got a heavy rejection, which is that wick from the lower low all the way up, right? Then you're entered on the 15, which I would recommend you go down to the 5, right? That's be a heavy recommendation on my part. Go down to the 5. But even on this candle, right? You got the candle to the left has a heavy rejection, means that the bulls saw that where the green dots are at, they saw that spot and they said, no, thank you, start pushing it back, which is why it's a wick, right? Then the next one is more of a doji. So this is more setting up for a buy. And of course, we already talked about the higher highs and lower lows. So like, it's a lot of things going on with that chart that I wouldn't have took a sell. But
That's true, and I'm looking at those things, Mr. Allen. You're absolutely right. But what I was looking at, sometimes I'm looking at it like this too. A doji could sometimes mean continuation, like when you look over here and it continued down. But then what's really getting to me, because I'm looking at my higher time frames too. So let's take a look on 30 minutes real quick.
Okay. Yeah. So right now you're having a Daniel Son Miyagi moment, right? Miyagi would be Coach Max. Daniel Son would be you, and you want to wax on, wax off the way Coach Max saying it, instead of leaning on, well, sometimes to do this, because that'll trick you, because now you're in your own brain, and now you can start, now you're gambling, working with percentages.
So
Go ahead.
Here we are on the 30 minute.
Right.
And I guess I didn't have good confirmation to get in because this here is a key level too, but I'm anticipating it to break it and at least come here.
Okay.
And I see it try to.
But
so at one point,
take a step back though. Take a step back. I want you to take one step back from your thinking right now. You're on the 30. So take that the 30 is not a good place to make the entry. The 30 is a good place to get your bias. It's to confirm your bias off the 1 hour or the 4 hour. So right now, what you're doing, even in evaluating it, you're negating, don't take the trade on the 30. As you're looking at why you would have, now look and say, I should take my trade on the 30, and let's go down to the 5. So instead of confirming or disconfirming the 30, which is helping you get better taking entries on the 30, let's not get better taking entries on the 30. Let's take it down to the 5. Does that make sense? Like, let's not practice getting better at doing it a disempowering way. Let's get that we took the trade off the 30 and say, oh, that was the first challenge. Let's go say that we thought we would have been thinking about a sell. I don't see it here because you're not even on the 30 near a lower high. So that's the thing to take off the 30, is that the lower high was what you would have been an entry was up top, not where you are. But so now take me down to the 5. I don't have to get better at doing it in a disempowering way. Just take that extra step for me.
Yeah, and then I just want to let you know what I'm thinking and what was going on while I was in this trade. So I'm also looking at this. At one point, this was a red candle coming down.
Right.
And I don't know if this helps, but I'm looking at all time frames.
It's not going to help you trying to take an entry on a higher time frame, though. There is a reason to look at every time frame, but you got to know the reason. Okay.
Oh my God, my computer is about to die. Okay,
Josh,
I'm sorry.
Josh, you got some input for this?
Not really much. The only thing that I can say specifically, I guess directly to Alexis, don't feel bad. I've been there. I've done it. I've done it all. Just one thing that has helped me is write it down and look at it. So I created, out of a big loss that I had, I created a checklist that I look at and I follow before I take a trade. One of the big things that Coach Max stresses is look at the higher time frames to kind of get a calculated, educated bias, and then the lower time frame for the entries. And then it'll just confirm your bias. and then go in from there. Another thing that I recently started doing, because if you're looking on the lower time frame for your entry, a lot of times you won't see that lower high print. So you're kind of confused on, is this actually the lower high? So I look at previous market structure and make a horizontal ray, and then know around that area, this should be the lower high. So now I'm gonna go in, if that makes any sense, if it helps.
Yeah, it does. And I noticed that too, that the lower high doesn't, or lower low, whichever, always print. And that's one of the things that gets to me as well.
Yeah, so one of the things that so I've watched Coach Max over and over, so I would encourage you to just continue to watch these videos over and over until it is like second nature to you. But if you look at, let's say UJ, you go back a little bit in time, watch it going on an uptrend, start making your horizontal raise, like the higher high. When it starts going down, it's going to become a lower high. So it's like, it kind of repeats itself. If it makes sense to you, I'm sorry.
Yeah. Yeah, thank you.
No problem. And you can reach out to me anytime.
Of course, same here.
Anybody
Mr.
got
Allen.
questions about the stuff? Yes.
Quick comment, or actually it's a question too. So a lot what, like what the ladies were saying, right, in the practice.
Put your stuff on the cart.
Okay, yes, sir. I'm on my way. What I've experienced in my trading, as I trade or when I trade, that if I can trust the discipline, because when I trust me, I have more losing trades. But when I trusted the discipline and the top-down analysis of what I was learning from Coach Mac, I have a greater win-loss ratio, and I got excited about it. You saw, you talk about it all the time, how I was just online, right, posting all my trades. But my point is this, is that the minute we get away from our disciplines, and I'm sitting listening to them, and I'm like, damn, I wish I was that disciplined. Like, they are creating a journal and all the stuff that you're supposed to be doing, and I'm not, because I only trade the two pairs that I know I'm most familiar with. And so, but if I could imagine if I was that disciplined, DA, to do what they're doing, with how well I know my pairs, my wins would be even greater. So I just commend them for being so disciplined. Now, my question is this: the areas that are pink are the key levels or zones?
Well, that's
Key levels.
Alexis. Yeah, that's Alexis drawing. So she had to tell you.
That's what I was just trying to find
Yeah.
out. So those are your key levels,
Mm-hmm.
right? And the idea, from what I understand, the reason the top-down analysis is there is so we can look long-term to see where the trends are, the bias of which way it might be going, pulling back to the sniper entry of what's happening right now, and where I get inside the zones, right? So if you can get in the right spot in a zone, or above or below a zone, what is that area, Dan, between zones?
Between zones, it's a range.
Range, okay. So if you can get in between the zones, right, at the right speculation, right, whether it's going up or down, that's really the ideal entry. And that's the whole, to me, that was the genius in top-down analysis when I learned it. I was like, dang, that's what I've been missing, is seeing a big time frame and then coming down to where I need to jump in and jump out and rob the bank. So that was my comment. My question was really just to understand her chart. Right. Thanks, Alexis.
Anybody else? Yeah, anybody?
Oops, sorry, I didn't mean to unmute you, sir. I meant to unmute myself.
Anybody else? I got it. Thank you.
I have a small question.
Sure.
So, like what was being stated, the pink and the green are the zones.
That's Alexis's chart, so she had to tell you.
So the pink is the key levels, and the green is just the market structure that prints on the 20 pips and dip indicator.
Hmm. Are those the zones then? Is that what we're saying are key levels, I guess? Is it just we're using different vocabulary for the same thing? Is that what that means? Or
No, that we're not. We're not. A key level is one thing, and a zone is something else. And Alexis, she's drawing her key levels with a box, which people that draw zones use as well, but they're not saying the exact same thing. Um, for super a deeper thing for key levels and stuff is just in the back office. So she's just showing you how she draws her chart. What I typically tell Alexis, this right here, I want you to see. I first, this is so Alexis can get the help directly, but I typically bring a more naked chart to the call. Hold on. So that way I draw my key level with a line. She draws hers with a square. People that make a zone, you have to look for. Coach Ryan draws a lot of zones, and so you can start looking at some of his stuff, so you can see why he makes a zone and where. They both were shaped the same with boxes, but they're not the exact same thing. No.
so key levels are support and resistance line.
No. A support line is where price stopped and it goes up, and it only has the requirement of being support. That's if I drew a line here, which I'm right. And a resistance line is a line that represents that price came up here and stopped. Those are two separate pieces of information. A key level is a line that has played the job of support and resistance at some point on the chart, and I've identified it.
Oh, okay.
So by the time, so I'm on the 5, if I wanted, this Dan, just as a trader, if I'm bringing information from higher time frames down to the lower time frame so I can do what Rambus is talking about, which is kind of have inside information, right? So I know that when price is coming up to here, it's about to hit a 4-hour key level. It's not just even a key level, because I'm on a 5-minute chart. It's a 4-hour key level that I can see on my 5-minute chart. It's totally different, right? Now, as I'm watching and I see price stopped here, I can then, for me, I don't draw a ray, which Jess said she did. I draw a very significant trend line, right? And then, because I'm on a 5-minute chart, this green for me is a 1-hour color for me. So I don't want to trick myself, even though I'm practicing with y'all. So I'm going to turn it blue. So now I know that this is a support line from the 5-minute chart. So as I'm setting up my next trade, I'm doing whatever, I'm watching and I'm saying, this is a 5-minute support. It may be valid down here later, and I may bring it in further. This isn't what you got to do or you should do. I'm just showing you what I do. So I have a color for each chart that I'm dealing with. So when we're coming up, and let's put the 20 pip and dip indicator back on it. But what I was saying to Alexis, that's volume. It just so happens that this 4-hour key level is also right now the 5-minute resistance, which are these dots. Then you got these green, which are 5-minute supports. So your support and resistance are represented by these dots models, and then they move because price is moving. So they tell you a story once you learn how to read them. So here, and I'm gonna just say Jabir because I can talk dad talk. Here, price comes down. This is the floor, which is support. Price comes up here. This is resistance. This is the ceiling. So right now between floor and ceiling is a small space. So that's consolidation. This becomes the range, what Rams was talking about. And then now I'm waiting for it to break this stuff. It runs up to a 4-hour resistance and a key level. Well, 5-minute resistance, which is the red dots, but a key level. And it drops down heavy. So, but I wouldn't have entered the trade here because I would have wanted to be under the 50. But I'm watching, I got a sell bias because the stuff that Alexis told me. So the stuff from the higher time frames, because me and Alexis, we're trading together, I know we have a sell bias, which means we want it to go down. So I'm not looking for an up trade, I'm only looking for a down trade. And so now it's bouncing off a key level, it's at a high. This one happens to be a higher high because it's higher than this one. Now I'm saying it's bouncing. I'm saying it's about to hit support because this green dots are here. And I'm saying to myself, if it bounces here and goes under the 50 and breaks under support, then I'll enter. So I wouldn't enter the trade until here, which is sitting on your hands. Now, since we got in at this level right here, right? I would have waited until because we're not at a key level that we can see. We're not at a high or a low, right? We're just in the middle of a range, which Rams was talking about. So although this is here, this is more of a sit on your hands time while you wait for it to bounce back up and then come right back around here.
So which candle would you enter in?
Right, this one right here.
Oh, wow.
Because I got the bias, that's there, because you're great at the bias, right? You already got that.
Yeah.
So we're coming down to the 5 and we already got our bias. We got our top down analysis done. We needed to do the other stuff now. So now you thinking that you're messing up, but what you're doing now is getting better to the next thing, right? So Jabir's boxing, right? I'm gonna say, throw the jab. When you see him dip his hand, give him something. But if he don't dip his hand, don't give him nothing. Right? That's all we're doing. We already know what to do. So now we just got to create the scenario that matches it, right? So we have our bias. It's coming down here, right? We missed this one because we took the trade down here. So we're coming in here. Is doing something. I needed to stay under the 50, but I need to get a low high. So when it comes above the 50, it now meets everything except do not take a buy trade when price is above the 50. So that's why the list that Jessica's talking about is so important. Because now we have all these other things, but now we're missing something. It ain't time to throw the punch or press the button. So when it breaks below the 50, this is the candle, this one right here, because it closed below the 50 is what she said, right? This candle is the candle that does everything. Now we have our confluence. And until then, we're supposed to be sitting on our hands or sitting with our guard up, just throwing our jab, keeping it busy. Or jump a rope, right? Sitting doing the back and forth until it's time to actually jump in the rope. And so the thing for you, Alexis, is to see what you're seeing. You see it, but wait for the confirmation or the confluence. And then this is instead of this candle, this candle.
Yes, sir. That's what I'm seeing. Definitely need to wait for the confirmation and confluence and get it right. My confirmation
to the 5. That's what you need to do. Please, when we talk this week, just say I waited for the 5. I went down to the 5. That's the other stuff will come too, but right now you're taking sniper entry thoughts on bias charts.
Can I ask a question?
Yes, ma'am.
Okay, so my question is that I typically look at the 1 hour and trade on a 30-minute.
Okay.
So is this technique can we look, is this scalping right here with the 5-minute?
No, it's sniper entry.
Sniper, okay, I don't know.
How long you stay in the trade is scalping or swing trading or whatever.
Okay, can we look at the 30-minute and versus, so I trade on a 30-minute, but I look at the 1 hour and the 4 hour for a trend.
So I can't help you because I just said Miyagi said enter on the 5, and you said I'm enter on the 30. So we live on 2 separate planets.
We do. Who is Miyagi?
Coach Max.
Oh, okay.
Look at the hour, get more information on the 30 to confirm what you saw in the hour. Enter on the 5.
Oh, okay.
So Mr. Allen, because my lunch break is, my coffee break is up. Let me ask you this question real quick because it's 12 o'clock sharp.
Yes, sir.
So rather we looking at the 30, the hour, I'm gonna just go beyond that. The daily or what have you, the entry, no matter how you observing this thing, the key time or the key level to enter is on the 5 minute, you say.
Coach Max, Miyagi. Yes, sir.
No, yeah, and I'm gonna follow that. I like that, and that's what I ain't gonna even get discombobulated, because if my coach say, look, throw a straight right hand, and end up with a hook after you throw the straight right hand, he's gonna be a sucker for that hook. I'm gonna throw the straight right hand and follow with the hook. I just wanted to put that in there real quick, man. I appreciate that.
Shaheed, listen, I'm boxing with my grandson, right? We're in front of the pizza store. And I'm throwing, right? I'm throwing a jab, and I'm throwing a left hook to the body, right? And I throw a left hook to the body. I throw a jab, I throw a left hook to the body. I throw a left hook to the body. I'm setting him up for the right hand all day long.
Right.
So Javier watching, Caleb watching, and so I throw that left hook to the body. He dropped his hand. I hit him. Then his other hand dropped. I don't got to think about it.
Right.
The right hand is right there for you.
Yeah, it's mechanically moving. Yup, I'm with you. I'm loving it.
And we all learn from our different experiences. So I'm only using boxing because that's mine. It could be jump rope. It could be something you've had to take the time to learn from somebody. And the reason why we enter on the 5 from me doing it is to limit your exposure to drawdown. And if you're trading big money, when you're in drawdown, you see big numbers in the red. Wow. And it don't feel good spiritually. Like you start feeling, Jess, Alexis, please speak to this. When you are trading more than $10 a pip and you go and draw down and you back 15 pips, you see $150. You're like, oh, this thing getting crazy. You start wondering, was I right about this? So if you can limit that exposure to drawdown and kind of get in, and you're going right in a profit because you did all these other things we're talking about, sat on your hands and got your confluences and all the other stuff, you feel more confident in the trade from the very beginning. So as we're closing out, Alexis and Jess, can y'all both speak to that piece? Watching the drawdown with bigger lot sizes?
Yes, sir. I'll try to, well, not try to, I'm going to work on entering on the 5 minute, because that's another problem that I have. When you're trading higher than $10 per pip, your heart begins to move with the candlestick. So I'm going to work on the 5 minute.
But I like your discipline. You got right out at that support. You said if it goes past this, I'm out. So that was a super decent thing in that trade. A very good discipline. But yeah, Jess.
Yeah, I agree with Alexis. It'll have you be about to pass out. That drawdown is no joke. So the less drawdowns you see or experience, the better or more confident you feel, because that drawdown will also have you wanting to get out too soon. So it messes with you psychologically as well.
1000%. Well, partners, Mr. Rambis, I'm turning this over to you. You can tell everybody what's going on for the rest of the day, and then we're going to get out of here. We're at the top of the hour. Do I still have them? I don't see them. Okay, so we're wrapping up. That's not my part. Miss Alexis, Mrs. Jessica, if y'all can give me your last comments for the day, then I'll shut this down. Y'all, everybody else, this has been great hanging out with y'all. Hopefully there's been some value. We can do this part 2 sometimes and just talk about a trade that one of us took throughout the week. And hopefully it's been, Nick, was this a good session for you, watching us back test?
Yes, absolutely.
Okay, good. Thank you. So closing thoughts, whoever first?
Well, I just want to say thank you, Mr. Allen. This helped a lot, being able to go over the trade. And to everybody else, have a good trading week.
Okay, Jess?
Thank you so much. Sorry. Let's have a good weekend. This is the part that makes us stronger. Just learn from our mistakes.
Awesome. So on behalf of Ms. Alexis Williams and Mrs. Jessica Arzu, my name is Dan Allen. I was one of your co-hosts. Have a great week. See you next week. Have great trading. Be well.